And welcome back, everyone. A very quick changeover from one presentation to the other. A lot of investors are getting all their money's worth in terms of really getting a detailed overview of that company, but also the questions have been fantastic. So once again, if you do have questions, if you are looking to ask them, either if it's right now or if it's halfway through or if it's during the question period, go over to that Q&A section. You can put the question there. Arturo is going to go over his presentation first. Then at the second half of this webinar, we'll go over all those questions as well. So Arturo, I'm going to hand it right over to yourself. They didn't come here to hear me. They came here to hear you. You just coming back whenever we're going over the questions afterwards.
Well, thank you very much, Brandon, and thank you for organizing all of this. Start with my name is Arturo Bonillas. I'm the president and CEO of Magna Gold Corp. Magna Gold Corp went public in June of last year, so it's a new company with old and experienced people. So that's the reason we put it together. The cover view that you see here is it's a nice panoramic view of our entire operation at the San Francisco mine, including 2 open pits and the new underground mine. You cannot see it there, but it's on one of the walls, the south wall of the pit. And it shows the heap leach dumps, the waste dumps and the heap leach pads. And I like it because it looks majestic to me. And the value that we're going to unlock here is amazing. I'd like to start with our strategy. As I said, we are a new company, but an old team, a very experienced team. At Magna, we have a clear growth strategy, including now diversifying into silver. We will announce that soon. This month of September, we began formal production, a ramp up at the San Francisco mine. And we're in the process of optimizing operations and increasing the mineral reserves at that mine. We're also advancing exploration on our currently owned project pipeline, and we're also actively pursuing external opportunities. As a comment, that we're being flooded by property offerings, so we just decided to create a project generation department with a couple of new geologists just for that specific purpose. By 2023, Magna shall be producing at a rate of 200,000 ounces of gold per year, and we shall have at least 5 million ounces of gold in the ground. It's important to point out here that one of Magna's unique strengths is the fact that we can operate in Mexico very effectively and swiftly. We're well connected. Mexico continues to have a fantastic potential for mining. However, not many companies can operate in Mexico. We certainly can. As far as leadership, we recently increased our board to 6 people. 4 of them are independent and 2 are not. The board is very interestingly composed of a diversification of Mexican and Canadian members. They bring international experience at the highest level. The newest members are Parviz Farsanji. He is CEO of Scorpio Mining with operations in Mexico. And Parviz was also COO of Vale Inco Limited. And he had senior positions at Falconbridge Glencore. Very important to mention the addition of Laura Diaz, also appointed director. Laura is a Mexican lawyer and the former General Director of Mines of Mexico, named by the new administration. She decided to go back to private practice, and so she joined us on the board. Laura brings tremendous knowledge of the mining laws and an incredible connection system within the current government. For more than 30 years, her law firm has represented top-of-the-line Canadian and international firms, including Sprott Securities, Franco-Nevada, etc. And finally, we brought in Miguel Bonilla, not related, He has been with this company since inception as Timmins Gold, and he was finally brought on board as a director. He also acts as country manager for Magna Gold. On our capital structure, you can see on that slide, we have a solid and tight capital structure, only 19% retail, 45% is institutional, including Eric Sprott, personally, US Global, Delbert Capital, Metals Capital, and Adrian Day, who came in since day one, among others. You can also see that we have two strategic partners, including Peal de Mexico, our mining contractor, and has been there for many years, with 16% of the company. And we also have Argonaut Gold with 12% of the company. There are 84.5 million shares outstanding and 90.47 million shares fully diluted. Most of the non-diluted yet are options given to employees and directors. On August 28, Magna updated a pre-feasibility study on the San Francisco mine. Report was prepared by Micron Engineering independently. It was based on current information on the property. That is, no new drilling was added. The report simply updated the reserves and resources with the new updating the costs. And the report confirms 1.43 million ounces of geological resources in the ground and close to 800,000 ounces in a mineable reserve. And we have a mine plan at this point in time, the current mine plan, which will change early in the year with the new drilling. But currently we have 8 years of an average production rate of close to 70,000 ounces of gold produced, and with an after-tax rate of return at $1,950 gold, with a 5% discount of $231 million. Of course, that's $1,950 gold. If you go down to the consensus gold price at $1,600 gold, by consensus I mean the consensus amongst the different institutions. This is what's going to happen for the 8 following years. The after-tax NPV at $1,600 gold is $126 million US. I'd like to point out that as you can see on the top graph, the all-in cash cost in the year 2022 looks high. But that will be reduced because it does not consider the underground mine that we've already developing, and two, the additional resources that will come with the extensive and aggressive drill program that we're carrying out right now. This is a quick comparison of value proposition and leverage to gold. We chose 9 peer companies. Not easy to find them, but out of those peer companies, 4 of them operate in Mexico, and you see that the price over consensus NAV versus price over Magna NAV. Consensus is 0.87 times and Magna is 0.47. On the right side, you have the price over, I'm sorry, what did I do here? Okay, good. Apologies for that. So the price over consensus cash flow for next year estimated, the peer companies are 6.6 times, and Magna Gold is 3.1. Below, you can see price over NAV versus the gold price. Consensus prices, that's $1,614 gold. It's 0.47 versus 0.29 at $1,950 for Magna Gold. And on the right side is the price over next year's cash flow. Consensus price is 3.1 versus Magna 2.9. So it is not difficult. You can see a double coming on stock price. This slide shows the San Francisco mine. We began formal ramp up of this mine this month of September. So we're in a ramp up year. Ore will be delivered from the San Francisco pit, La Chicharra pit, which are close together, and the new San Francisco underground mine. We took control of operations in May of this year, and as of September, that's 5 months, we've already sold 12,450 ounces of gold, an average of 2,490 ounces per month. October will be better than that. This production came from improvements in the residual leaching of the historical crushed ore and from processing of some leftover low-grade material that was left there. It's important to say that the company has generated in that period of time sufficient cash to carry out considerable maintenance and repairs of the process facilities. That money also generated to build initial leach pads and to start investing in the required pre-stripping of the pits. The opening and development of the underground mine is also being paid by production-generated cash. During this year, the company expects to produce in the order of 25,000 ounces of gold this year and continue with that generation of money to pay for the plant refurbishing, which there's a lot to do, continue developing the underground mine, and also pay the debt that was owed to the mining contractor, and one of the reasons why we bought this company. So the mine is ramping up at the same time, generating cash to pay for all of those important requirements. That's basically to put it back in a nice and stable ramp up. This slide shows it's a plan view of the operations. Just quickly, we're next to the international highway to the US. An hour and a half drive to Arizona, an hour and a half drive to the south to Hermosillo, where I live, where I am presenting now. We have the Estación Llano town that provides personnel for the mine, about 80% of the personnel. We don't have camps. We don't have camp facilities. We don't have mess halls. So that's very important for our cost. And then you can see in the middle, the San Francisco open pit. And within that, the San Francisco underground mine, which as I said, is the new feature. And the La Chicharra open pit to the left side. This area covers about 600 hectares of land. We have, as a company, we own more than 1,700 hectares of land, so there's ample space to grow. Again, quickly, the 43-101 report dated August 28 this year. On the left side, you have mineral reserves with a total of 46.8 million tons of 0.5 grams per ton, which make up 752,000 ounces. That's in the current mine plan. As I said, it will grow. And the resources to the right, we have a measured and indicated 99.7 million tons of 0.46 grams per ton for a total of 1.43 million ounces. The important to say that the mineral resources were run at $1,500 gold, and the mineral reserves, our mine plan, was run at $1,350 gold. Many people have asked, why did we buy this? We bought it first because we know the mine. We know how to unlock the value. What happened? We acquired the mine very cheaply if you look at our pre-feasibility study technical report, you want to calculate the rate of return, it'll be infinite because we didn't put any money into it. We bought the mine for 9.7 million shares in the company, and $5 million to be paid in a year after signing. What happened, and it's problems of number one, large tonnage deviations from the mine plan. For some reason, the operators could not follow the mine plan that they had established. Number two, the other big problem was they started getting very low metallurgical recoveries. They changed heap leach practices that were there before, and they started experimenting with different methods of irrigation. That strongly affected the results, as I'll show on the next file. And the operational disarray, the people who knew, had been there for years operating the mine, and who knew about the geology, about the recoveries, they were no longer there, and they didn't last there for 6 months. So we've implemented solutions. We have an operational improvement plan by way of initially our 43-101 pre-feasibility study report. We reincorporated past leach practices, which showed to be very beneficial, especially the earlier months, May and June, where we draw a lot of cash. We reestablished the original team. The human capital is what's most important here. Now we have everybody back, and we are still hiring to grow. We reestablished relationships with the local stakeholders, the union, the community, so that's going very well. And we are employing a very focused exploration discipline to expand the mineable reserves. This quickly shows the performance of the mine between 2014 and today on a yearly basis. You see that in 2014, the dotted line shows the metallurgical recovery, and on the histogram, and the gray scale is the ounces placed on the pads, or in other words, ounces mined from the pit. In blue, you have the ounces produced. So you can see the 2014, we had a very good year, 120,000 ounces. Then 2015, 93,000 ounces. The grades started dropping those years. 2016, we produced 100,000 ounces with a 70% recovery. 2017, I was there half a year, and important to say that I was there. I was the co-founder of the original mine, which was called Timmins Gold Corp. I left in 2017. I stopped being the president in March and left the company in May, the end of May. So that year we had 77% recovery, but production dropped to 83,000 ounces. The following year, 2018, is where all of the problems that I mentioned in my previous slide came in and kicked in. You can see recoveries dropped to 55%, and the production was 51,000 ounces. 2019, the mine stopped producing. They stopped the mine, I think, in the month of September. By that I mean mine extraction stopped, and they just continued processing the low-grade stockpile that we had left there. Low-grade stockpile average about 0.28, 0.3 grams per ton. So that year we had 71% recoveries, and production was 36,000 ounces. The current year, and I'm counting here from January to September, we began working there in May. We don't have recovery available because we didn't really mine anything up until the month of September. So we have produced already 18,825 ounces. So we're targeting 25,000 ounces. I think that's a conservative number. We will surpass that. This is a resource potential. I say it organic resource potential. This is a claims map. The squares in orange are the claims that we acquired from Alio Gold. There are about 41,000 hectares. And in green to the left is a property that we had acquired as the original Magna Gold when we started trading. The potential here is, first of all, within, around, and at depth at San Francisco pit, and I'll show you where. And then some targets to the north with limited drilling. The model here is the Mojave Sonora Mega Shear, which is very prolific. You just have to understand the ore bodies and the system. And you can follow these targets to the north, all the way to one called La Pima. La Pima is a silver asset. We're drilling. We started drilling 2 weeks ago. And the San Judas property to the left, that is a very, very interesting property we acquired. We tried to get it for years. When we were at Timmins, we finally acquired this Magna Gold, and we can see another San Francisco mine there. We will start drilling that next year. As I said, this is a cross-section of the main body called the San Francisco pit. You can see there's 3 ore bodies extending to the north. And those 3 areas are near-term growth potential. We are drilling them to find the extension of those 3 areas. So we shall be extending the pit to the north. There was very limited drilling in those areas. So we are engaged in drilling. The total program for the San Francisco pit is 30,000 meters. And historical drilling at the mine, at this pit, there have been close to 400,000 meters of drilling done on this property. And that means that with the same people who drilled it, we know the ore body very well. So that's one of the potential extensions to the pit. And again, we're drilling not to explore, we're drilling to add ounces. This is a long section of the pit. The previous one showed the cross section, which is about 500 meters in width. This one is, you can see the current pit floor. This one has about 1.5 kilometers in length. The green shaded ovals that you see there show the areas to grow where we are going to drill, where we're drilling to add ounces. You can see the extensions are to the east now. Again, you can see some very nice intersections and limited holes to the east, to the right. We're drilling that, we're covering that, those areas that say open. And very interesting, to the left, below the pit, you can see a large oval where we have discovered and now are mining an underground mine. We are also drilling that area and the other area that you see below. So again, as I said, the 30,000 meters of drilling we are doing very aggressively shall produce a new mine plan. And with it, I like to call it a new business plan for this pit. This is what I was referring to, the underground mine, that you can see that the veins that we found are parallel to the south pit wall. You can see vein 1, vein 2, vein 2A, and vein 1 down dip. Those are below the south wall. Below the north wall, more on the eastern side of the pit, we have identified a 3rd vein. The vein number 1, we are already producing from it. We are getting gold from the development ore, and we're also just started bringing down ore from the vein system. We shall be producing next year at a rate of 1,500 ounces, 500 tons per day, at about between 4 and 6 grams per ton. The mine plan that we published is 43-101, does not include next year, the underground mine next year, because the independent company engineering firm didn't allow us to do it until we drilled it further. We completed all that drilling, and we are going to include it next year in our guidance. We're also drilling to connect the down deep vein with the veins upwards. This is a map, and I should have shown you a general map initially. We are located bordering with the state of Arizona in the USA, and our properties in green. We have properties in two very prolific gold belts in Mexico. The one in pinkish color, where the San Francisco mine is the Mojave Sonora mega shear, where you have, amongst others, the Soledad de Polos or La Herradura mine from Fresnillo. And there have been a lot of mines all the way to the California, Mesquite mine, Cargo Muchacho, and others. You can see the properties that we show there, up highlight of San Francisco Gold Mine, La Pima, and San Judas Gold Project. We just acquired the Los Muertos Silver Project, and we are putting together a silver portfolio that I'll mention later. And you can see also on the Sierra Madre, that's the green shaded area. There's the Sierra Madre Gold Belt, where we have our qualifying transaction property that now will become a mine very soon. It's called the Mercedes Gold Project. And we are, that's basically, we are advancing on various stages. I'd like to follow up here with the catalyst. I like to call them our near-term catalysts as Magna Gold. And our first catalyst is the San Francisco mine, where we shall be increasing the mineable resource by the end of the year, early next year, through a 30,000 meter drill program, at least 250,000 ounces. And as I said, we're not exploring, we're drilling to add ounces. And with that, we shall have a new business plan with additional reserves that I think will require us considering a potential expansion of production capacity. We shall have a lower operating costs because we'll bring in the underground mine, whose cash cost is below $700 per ounce. And we shall also have economies of scale. That is what we're envisioning. We don't have the plan yet. We have conceptual ideas, but we have to finish the drilling. And the reason is because we want to bring the gold closer in time to present. Second catalyst is the Mercedes project. As I mentioned, that was our qualifying transaction property when we started out as a capital pool company. You can see the photograph on the left, that reddish hill. That's the hill where we have designed a starter pit. That hill is called La Lamosa. We are using the capacities of the San Francisco mine to put this in production. We are going to do a small heap leach operation. And first of all, because we have designed a pit, the one that you see there on the cross section, that has a 0.3 to 1 strip ratio. The block model of measured, indicated, and proven probable now has about 20 to 25,000 ounces, and out of those we are extracting 20,000 initially. We're only extracting from the areas that we drilled. It has a lot of potential to grow, but we have now the plan to go there and put a plant in production with very low cost. The metallurgical recoveries are very good. for heap leaching. We're going to use used equipment from the San Francisco mine. We're also going to use the gold plant at the San Francisco mine. It's a 3-hour drive from this property, next to the highway, next to the power line. And we shall be generating an interesting amount of cash around the second quarter of next year. We're already working on that. Third catalyst is La Pima. As I said, we're already drilling. La Pima is a 3 to 5 kilometer fringe of old artisanal workings that have amazing sampling results. And we shall have news in a couple of months. Next catalyst is San Judas project. It's about 35, 40 kilometers due west of the San Francisco pit. And we are developing there a structural model based on geological mapping. We're doing a lot of sampling. We have identified 3 targets, and we shall have, by year's end, determined phase 1 of drilling, and then that will take us to phase 2 of drilling. As I said, I think our geologists think that we have another 1 million ounce deposit there, but we'll know after drilling. The other catalyst is, as I mentioned, we shall be, if we do things the way properly, and we shall be producing next year over 100,000 ounces as a company, as Magna Gold. The initial on the table you see 66,000 ounces that come out of the pre-feasibility study that has been published, but that plan does not include the underground mine. And I'm adding there about 30,000 ounces to come out of that, the underground mine. And from our starter pit, I'm using 8,000 ounces. So there's no reason why we shouldn't be able to do that, even without any drilling. But the drilling, again, it's moving forward quite quickly. And finally, we're putting together a new silver portfolio. We're in the process of acquiring a very interesting portfolio of silver properties in northern Mexico, mainly Sonora and Chihuahua. All those properties were previously drilled on or worked by junior Canadian companies. We like the idea that junior Canadian companies worked on them because they do very good work, high quality work. You can still find a lot of these reports on CDAR, and as you know, junior companies come and go. So we're aiming at a portfolio that can show a potential of 200 million ounces of silver, all in exploration. We shall be announcing our silver strategy in a couple of months, but we're very close to closing our last agreement to be able to put that package together. That is where my presentation ends. I am open for questions, and thank you very much for listening.
Arturo, I thank you very much for taking the time to go over that presentation in detail. And we do have some questions here. I'd love to get to that. I believe we have a video that you'd like to end
I see
on.
Brandon trying to reconnect.
Oh, can you hear me here, Arturo? Might have been a little bit of a delay for my camera, for my microphone coming back on. I'm not sure if the rest of our team can see me. It might just be Arturo not seeing me just yet. So I'll continue to speak in the sense that thank you very much for all of this. We do have a video afterwards that we're going to be using. Arturo, are you able to hear me now? Have I come back into your screen? If anyone doesn't mind, forgive me. If you can go into the chat room and just let me know if you have seen my my voice here, or if you've seen my face, heard my voice. Arturo, can you hear me? I believe it's just on Arturo's end here. Give us 1 second here. Everyone, my apologies.
Hey,
here.
Brandon.
Hi, Arturo. Can you hear me?
Oh, thank you. I can see you.
Oh, beautiful. And can you hear me as well?
Yes, I can hear you and see you, yes.
Okay, so I apologize, everybody who's watching here. I believe it's just between our two computers there. It's one of the things where we're not in front of each other anymore. We have to rely on programs and internet and all the like, but I'm glad you could hear me here. I just wanted to say thank you very much for going through everything. It was a fantastic presentation. I believe you have a video you'd like to end off with as well. Is that correct?
That's correct. Yeah, maybe after questions or because the video shows the current situation at the mine, what we're doing. If you want me to show it now, I can do it.
We'll do it. We'll do it to end off here, but we'll do questions up until 4:20 here. So what we'll do, Arturo, we'll go right into the questions here. The first question here is from John. It says, curious to get your thoughts on why Magna is trading at such a significant discount to its peers, as you covered in your presentation.
Yes, we have not done any marketing. We have no coverage from any institution. The marketing that I've done is limited, and that's an area where this would be like the startup of our marketing with you. I would say that is the main reason. We will be much more active. We've done commercials on BNN Bloomberg, also limited, which I'll show at the end. And I guess investors and people does not know our story well yet, and they have not seen our catalysts.
Very interesting. Well, one can look at that as a potential opportunity to catch some people before other people see it. Obviously, always do due diligence. That's why you're here, doing just that. But
yes.
I know, interesting to hear.
Yeah, maybe also we're in a ramp up, and maybe people are waiting to see, is this going to work? And but we had a very successful ramp up. Maybe that's the other reason.
Very interesting. Well, we'll definitely see in the very near future here. That's for sure. Now, speaking of not so much near future, a little bit further into the future, the next question is, where do you see Magna Gold at the end of 2021, the end of next year?
Oh, yes. I see Magna Gold at the end of next year nearing 200,000 ounces in production, at least at that rate, because we are being very, very active in acquisitions also. And I also see us at least doubling the resource that we have now, which is about 1.5 million ounces. And that shall be increased organically as well as by acquisition. So that's where I see ourselves. And that's what the entire team here has ingrained in their minds where we're going at.
Yeah, very interesting. Glad to hear. Is there a market discount? The next question here. Is there a market discount for jurisdiction?
I don't think so. The state of Sonora, where we're at, the same as Chihuahua, they are the best, some of the best jurisdictions in the world to work in as far as mining. With the new government, nothing has really changed, and I don't think it will not change any longer. And the Mexico, I think, is still one of the best jurisdictions in the world for mining opportunities. But that's one point that is unique about us. Not many foreign companies can operate here, and that's an edge that we have. We live here. I live here, and the whole team is here. Mm-hmm.
Yeah, I've always looked at obviously very, very different areas. But if you look at things like Mexico, I'm not sure if you're familiar with Quebec on the Canadian side, and there's many others where if you're from the region, you get things done much easier. They like to see it within house, so that's good to hear.
Yeah, that's correct.
The next thing here is, what do you think the sustainable rate of production will be for Magna in the near future? I believe you just touched on that just a moment ago.
Well, the plans for next year on the San Francisco mine currently 66,000 ounces per year. But as you saw, next year we shall be sustained at least 90,000 ounces per year for the next 8 years. That's how I see it. And after we are completed with our drilling program, which it's really what will unlock the full value of this property, then we should be over 100,000 ounces from the San Francisco mine only. And that does not include the other property up in the mountains and another acquisition. So we shall be, half our 200,000 ounces early in the year at that rate. That's where I see us.
No, fantastic. Another question here. It looks like a multi-part question. They ask, What are the future capital requirements of the company? Will development at San Francisco, both at the open pit and underground operation, and the Mercedes project covered by will they be covered by operational cash flow?
Yes, at the current rate, yes. We raised money to acquire the mine, and we haven't used it.
Mm-hmm.
So the operations will sustain our current plan, the underground mine and the current open pit mine, and also the Mercedes property. That's small. However, that's not the plan. The plan is to accelerate the stripping with the new plan, and when that happens, I imagine that we will need around $20 to $30 million. If it depends on our business plan and how it looks. And before that, I'd like to raise a little bit of money just for a cushion and to keep looking at opportunities. As I said initially in the presentation, we're being flooded by offers from properties, and we're not letting one single one of them go without us looking at it deeply. So there may be something that we find there. And again, we're in a ramp up. I consider Magna right now in a ramp up and in an early transition phase where we shall unlock a lot of value further on. We will need to raise money and in those general areas.
Yeah, absolutely. And one of the questions that I was going to ask you, which is somewhat along the question I'm just about to ask you here, is when it comes to all these things, there's always challenges any company faces. They're always there. And I was going to ask, are there certain challenges that you need to overcome? But this question is somewhere along those lines. Jason asks, are there any issues with security or cartel activity in the area of the mine that could impact operations like what happened to Alamos Gold's Mulatos mine earlier this year with the theft of gold ore bars? How solid are your relationships with the local community as well as the local and federal governments? A deep question.
Sure. Our relationships with the local communities and local and state federal governments are excellent, are pretty strong. They've always been like that. So that I don't see any problem there. Quite the contrary, they protect us in case of they are there for us. Security issues, cartels are everywhere in Mexico. We've never had a problem at this mine with any cartel. We've never had any robberies. The robberies that happen are sporadic in the region, in the Sierra Madre with Mulatos and another mine nearby. But they are sporadic. They are mostly supposedly inside jobs, so very specific. We are located in the main highway. We're located 15 minutes away from a major town, 50,000 people. We're located 10 minutes away from the federal police station. So we've never had any issues, and the cartels will continue to operate. I don't know for how a long time, but we don't have any problems here. It's a general problem in Mexico. It's different in southern states. But still, we work and produce.
Yeah, no, absolutely. And hence the question as well, having those relationships, being in the area that you are, being close to populous areas, the police, I can imagine, like just as you said, all those things bode very well for your company. And I appreciate that question, Jason, because it's a valid question for sure. The other element, Arturo, is a lot of we've always obviously been faced with COVID-19. It's been affecting many different areas and things the like. How is your company adjusting to that and rising up to that challenge throughout all of your workers and keeping everyone safe? Is that something that is a challenge ahead of you that you need to get through, or is it something that you've found the means and the ability to get around for the time being?
Oh, we certainly found the means and the ability to do it. The COVID-19 has not affected and did not affect operations at all. Quite the contrary. Not that COVID helped, but we produced more than was expected. We'd had 5 cases of COVID at the mine. We have very, very strict measures of sanitary measures as you go in. You get checked, like pretty standard, but we're very enforceable. Same as with the offices. COVID has not been a problem for mine operations or mine results. And as things develop, we will keep adjusting. But again, it has not had an impact at all on results. I don't expect them to happen. And we continue with our same pace of work.
Yeah, absolutely, and that's good to hear. I know some companies it hits harder, some less, and it's really, you got to count your blessings when you can really keep going, because it's obviously been affecting a lot of us. No one's safe from it. It's all over the place, but or safe from production issues or anything like that. But it sounds like you guys have been powering through that. We have a follow-up question here to the last one, where it's a follow-up question to your answer that was earlier, related to Magna not having done a lot of marketing in the past. And that could have been one of the things that has allowed the share price to be at the place it is now, instead of further above, which I know you believe it's going to be going, and where you believe it should be. When it comes to getting that word out, just like this conference, coming on here, meeting new investors, having this to share with investors and things of the like, what other things have you put together or planned in order to really get that message out to investors, so that they can see the story that they haven't seen possibly before?
Well, we first of all, we don't have a corporate development person or investor relations person. We've kept the company in this initial stages. We've been more worried on putting the assets together and putting together the right plan and design the plan to rescue the San Francisco mine. So we've basically been working very hard on the basics. But now, we don't have an office in Canada. Our office address is with the lawyer's office. We've just so it's time now to grow and strengthen our support base. So we hired a VP finance already. He's been in place for about 2 months now. We hired a controller. We just getting our board meetings organized. So we have a corporate secretary, and we are about to hire a big name in corporate development and investor relations. So that's the first step, and there will be a strategy. We'll be hiring that person in November, and that will be like the first stepping stone. And now that especially myself, has gone through the basics, now I'm going to spend about 70% of my time marketing everywhere I can. That's the situation now. And again, we don't hire people until we have the need to hire them at the stage where the company is. So we now have to go and promote it and tell our story. And I promise that we will be very, very active on that front.
Absolutely. And that actually answers the question I was going to end off with, because we've got about a 4-minute video that you'd love to show that really talks about your company. And for all investors here, we'll be signing off here, but we'll be watching this video. Then we do have our closing speakers, fantastic speaker coming up. You're going to learn a lot from the two of them as they go back and forth. But the last question for you, Arturo, was, what should investors be excited about in the near future? And you just mentioned numerous things that an investor would look at and say, okay, they're starting the promotion, they're getting the right people in place, they're pushing forward. But is there anything else that you'd like to leave investors with before we turn over to your video?
Well, I think those catalysts are quite exciting. We're not they're not plans in the future; they're happening now. And I think investors should look at our development, how we do things. And again, we'll be doing a lot of marketing, and a catalyst 100,000 ounces next year with what we have. That's without even considering the other catalysts, like the silver play. That's very interesting. The silver portfolio, we'll do something with it that brings a lot of weight to current Magna shareholders, and that we're working on that strategy. And we're also, as I said, very active on acquiring another operation, but it has to be the right one for us. It has to be. We don't want to pay out at this time half our market cap for something that will happen 3-4 years from now, and so we will not endanger the company. I think we have a lot of value to add as is. However, it doesn't mean that I understand that we have a window and we have to make the most out of it. So M&A, and that's what gets me. I'm very excited about what we're doing here in all these fronts.
No, it's fantastic to hear. Well, Arturo, I appreciate very much for your time and for all of this. Lastly, where can investors turn to? And then we'll shut off our cameras and we're going to let the video speak for itself to end off our presentation and our webinar today. But where can an investor reach out to talk to you and to your team to learn about more?
Well, we have info@magnagoldcorp.com or me directly, Bonillas@magnagoldcorp.com, or you can reach me directly, or Carla, our Mexican investor relations. She's yeah, it's a little difficult. I'll give it to you. You have Carla Larinaga@magnagoldcorp.com.
Beautiful.
You get the info, right? The info at info@magnagoldcorp.com. But I'd like to, receive them myself. I'd like to see them myself and be able to respond more quickly.
Absolutely. Well, my good man, once again, I appreciate very much as I flip this over to a video and then pausing it just before we turn off our cameras. I want to thank everyone for tuning into this webinar. We do have another one coming up, which is fantastic. I really do recommend sticking around for it, especially this video too. We're playing this for a reason. There's a lot of information in here. So I'll go ahead and shut off our cameras here, Arturo. And once again, thank you. And I'll play this video in the background.
Thank you, everyone.
Take care.
Some stories can be summed up in one word. In the case of Magna Gold, growth is that word. We spoke with the president and CEO from his home in Sonora, Mexico.
Magna Gold is a Canadian mining company engaged in operations, development, exploration, and acquisitions of mines in Mexico. We have a very simple business model. It starts with growing organically. We only acquire properties that are near-term production that were either mismanaged or that were forgotten in previous years that had already been worked on by Canadian companies. And also, we don't like to engage in debt. We prefer to do it with our own generated cash. So we like the idea of bootstrapping.
Which is why the San Francisco mine, a past producer located in Sonora, Mexico, was such a perfect match. It was acquired by Magna Gold in May 2020.
We bought the asset at a very good price, and we are turning it around without any external money. The mission here is to generate and unlock the tremendous value in the property with our own sources, which we are successfully doing.
The company has already updated a pre-feasibility study.
The numbers look great. The study shows that we have 1.5 million ounces of resources in the ground. We have close to 800,000 ounces of gold that we're going to extract from the mine over the next 7 years at a rate of 70,000 ounces per year. The current year, 2020, we expect to produce close to 25,000 ounces. We expect to have, by the end of the year, in the range of $20 to $25 million in cash in the treasury.
With the San Francisco mine becoming a dual underground and open pit operation, costs will be lowered and cash flow increased. Another Magna Gold asset that's on a fast track to production is the Mercedes project.
The idea in Mercedes is to start mining by Q2 next year, extract and produce 20,000 ounces, which are the ones in the resource, and generate approximately $20 million because the cash cost and the production costs at Mercedes are quite low. We have already obtained most of the permits to start mining, and we are advancing on the flow design and the process design and metallurgical studies.
At Los Judas, another gold property similar to San Francisco, drilling is expected to begin by the end of the year. Magna Gold also has significant silver assets. La Pima came with the acquisition of the San Francisco project.
It's a high-grade underground mine, and you can go along 3 kilometers and go inside all the mining operations. Our sampling has averaged between 200 grams and 1 kilogram of silver. We started core drilling, and we are very excited by what we're finding.
Arturo Bonillas is extremely upbeat about the potential growth of the company.
What excites me the most is to see our company becoming an intermediate gold producer in 2 years, and we shall have 5 million ounces in the ground by then, and at the same time growing the company.
Magna Gold is acquiring a new silver project in Sonora and is still on the lookout for yet another near-term gold mine.